good to have you join us today. Hello and welcome to Business Daily. I'm Lee-Jiun in Seoul. Before we get started, let's first get a glimpse of today's highlights. Facing a prolonged slowdown in the global economy, things are not looking too bright for Korea next year. A state-run think tank projects that growth may sink to the lowest in 5 years. The U.S. Supreme Court has ruled that Samsung doesn't have to pay Apple all of its profits made from products using iPhone designs. These stories and more coming right up. Many financial institutions have revised down their 2017 growth outlooks for Korea as the country faces growing external and internal risks. And to give us more details on the prospects for next year, our Kim Min-ji joins us in the studio today. Hello, Min-ji.
Hi, Ji-yoon.
All right, so a state-run think tank was the latest to slash its growth outlook.
Yes, the Korea Development Institute cut its growth projection for the Korean economy for next year to 2.4%. And now that's actually lower than this year's forecast of 2.6%. It cited slowing exports and faltering consumption and says looming uncertainties are greater than ever before. The Korea Development Institute has slashed its economic outlook for the Korean economy for next year. The state-run think tank expects 2.4% growth next year, down 0.3 percentage points from its previous forecast in May.
The country's exports will post limited growth amid a modest recovery in the global economy and a slowdown in global trade, while domestic demand will also contract gradually on a decline in real income. On top of that, a U.S. rate hike and trade protectionism are some factors that can drag down Korea's economic expansion.
If projections are correct, that would be the lowest growth rate in 5 years, and the third straight year Korea's GDP growth remains in the 2% range. What's worrisome is that the latest forecast does not take into account the latest political scandal. If uncertainties prevail, growth could be pulled down even further due to a contraction in consumption and negative impacts on production and the labor market. More specifically, as government programs to boost demand have come to an end, growth in private consumption is expected to fall to 2% in 2017 from 2.4%. The ongoing corporate restructuring drive also continues to weigh on the manufacturing sector, with investment growth forecast to inch down 0.8 of a percentage point to 3.6%. The KDI said in the short term the country may need to rebalance its fiscal and monetary policies in order to prop up growth and reduce immediate economic headwinds.
So it's slower than this year's 2.6%, and it is in line with many other financial institutions, right?
Yeah, you're right. Many have already slashed their growth forecast for next year. If you take a look at this chart, the majority have their projections hovering at around 2.5%. The government still holds on to its outlook of 3%, but this was made back in June, and it's likely to lower that at the end of this month. The Bank of Korea also recently revised down its projection by 0.1 percentage point. So the KDI is lower than the government, the central bank, and the OECD, but some private institutions have even cut their forecast to the low 2% range.
So I guess these weak figures do indicate these dire conditions that Korea's economy is facing. But could you give us a rundown of some of the major unpredictabilities for next year?
Well, if we first take a look at external uncertainties, most analysts have their eyes on the Fed's meeting next week. Most analysts are predicting a rate hike, and what's worrisome is that it may be the start of many more to come with the Trump administration. And this could trigger a capital outflow from emerging markets, and due to weak economic fundamentals there are concerns this could ignite a financial crisis. And on top of that, the possibility of increased protectionism, as also people worried as Korea depends heavily on exports, not to mention the risk stemming from political events in Europe, such as Italy's referendum and Brexit. Now, back at home, the ongoing corporate restructuring drive continues to take a toll on related industries. And most recently, the power abuse scandal that has rattled the country will likely pose a big threat as it dampens consumer sentiment and also delays progress on key economic policies.
Yeah, we think that the political uncertainties are high and there's no timeline that would be set to stabilize the sentiment, both for the domestic confidence as well as the global investors. But if the president's impeachment or the stepping down schedule is pretty much set or the president makes a decision to make a peaceful transition of power, that could stabilize the sentiment and also eliminate some of the uncertainties.
What offers some relief is OPEC's recent decision to curb oil production and the expected global oil price boost that will follow, and the fact that the American economy is on a path to recovery. And on top of that, President-elect Trump has pledged expansionary fiscal policies, as well as tax cuts and domestic support for the U.S. economy, which could have positive effects on Korea's trade front.
Now, as we saw in your report, KDI said there should be more expansionary measures. But if this growth remains weak, then do you think we see more fiscal stimulus or monetary easing?
Yes, it's expected to be pretty much the same story as this year. The government decided just yesterday to front-load 68% of its budget in the first half of the year. And many experts are saying that after that, Korea could use a budget supplement in the second half. But on the monetary front, an economist I spoke to said things might be a bit different.
We expect further stimulus measures next year. Monetary policy-wise, the central bank is limited in what it can do, as rates are already at a record low, and the country has high household debt levels. Besides, it would be moving in the opposite direction of the U.S. So instead, we expect more fiscal measures. Recently, the trend globally is shifting from monetary to fiscal policy.
Now, Korea's fiscal conditions are sound enough to endure another round of stimulus, with the debt-to-GDP ratio standing at around 40%. But experts have said that while this could prop up immediate growth, Koreans shouldn't rely too much on temporary measures as such.
So going forward, what should be Korea's economic policy direction in the long run?
Well, the government is scheduled to release its policy blueprint for next year sometime at the end of this month. But Korea is currently stuck without a strong so-called economic control tower in light of the political crisis. But experts say the focus should be on boosting consumption. Consumer sentiment has fallen to levels not seen since the 2009 financial crisis, and more measures need to be taken to boost their income and encourage spending. On top of that, we also need structural reforms in the labor market, the public, financial, and education sectors, which are core factors behind Korea's strength. And in the long term, work needs to be done to foster industries compatible with the fourth industrial revolution, as well as scrapping excessive red tape, as Korea, as of now, lags behind other countries in such efforts.
Well, it sure looks like a murky road is ahead for Korea. Thank you so much for your report today.
My pleasure.
The country's longest-running railway strike looks to be coming to an end. After 72 days, leaders of the Korean Railway Workers Union reached an agreement with KORAIL today to normalize operations at an early date. The strike looks to end as early as tomorrow. KORAIL representatives said after engaging in intense negotiations since Tuesday, the two sides agreed to a wage agreement. In its press release, the Railway Workers Union lamented the lack of traction, in part due to the Choi Soon-sil scandal that has consumed the country's attention. It also pledged to continue the fight to overturn what it called the illegal performance-based salary scheme. Korea announces its goals in following the enforcement of the Paris Agreement by cutting down greenhouse gas emissions by more than 30% before the year 2030. Our Lee Min-young has more.
Korea mapped out a new plan to drastically cut greenhouse gas emissions by 37%, or 3.15 million tons, by 2030. This roadmap, approved by Prime Minister Hwang Kyo-an at a cabinet meeting on Tuesday, comes on the heels of the adoption of the Paris Agreement on climate change led by the United Nations, which entered into force in Korea on December 3rd. To minimize the impact on the economy, the government decided to keep the reduction rate below 12% in the industrial sector. To break down the numbers at home, the government plans to cut 64.5 million tons solely in the country's power generation sector, while the industrial sector will have to meet the target of reducing 56.4 million tons of carbon emissions as well. Buildings will also decrease their carbon emissions by 35.8 million tons, and the energy sector will have to cut back emissions by more than 28 million tons. The government says it will strictly ban the construction of new coal plants and increase the supply of green energy that uses renewable sources, such as solar power. The ministry said it will double its Scheduled Renewable Portfolio Standard, or RPS, which requires electricity supply companies to use a certain amount of renewable energy sources when producing energy, to 7% by 2020. The rate is currently set at 3.5%. The public sector will inject more than $950 million into R&D in the clean energy field by 2020, and companies will also be given more emissions rights when they invest more on eco-friendly facilities. Lee Min-young, Business Daily.
A growing number of Korea's top 30 conglomerates are putting more money toward charitable donations, despite falling sales. Corporate Tracker CEO Score says 193 companies under major conglomerates donated $784 million in the first 9 months of this year, up nearly 13% on year. Now, over the same period, their combined sales dropped 3.5% to $605 billion. Tobacco company KT&G donated the most with a donations to sales ratio of 1.02%. It was followed by CJ Group at 0.45%. The tracker was not able to confirm whether the contributions included cash gifts to the two shadowy foundations controlled by President Park's confidant, Choi Soon-sil. The U.S. Supreme Court has sided with Samsung Electronics in its design patent battle with Apple. The ruling lowers the possibility for the Korean company to pay the entire penalty requested by the iPhone maker. Our Lee Ju-young reports.
The U.S. Supreme Court ruled in favor of Samsung on Tuesday in an 8-0 decision, throwing out an appeals court ruling that the Korean company had to pay $399 million in damages for infringing several designs of the iPhone. Samsung previously filed a complaint as the amount requested represents the company's entire profit from the sales of products that used Apple's designs. The patented designs include iPhone's rounded corner front face, bezel, and its grid arrangements of icons that represent programs and applications. Justice Sonia Sotomayor said a patent violator does not always have to hand over its entire profits from the sales of products using stolen designs if the designs covered only certain components and not the whole thing. The justices sent the case back to the U.S. Court of Appeals for the Federal Circuit to determine what portion of its profits Samsung must pay. Apple says it remains optimistic the lower courts will again send a powerful signal that stealing isn't right, while Samsung said the Supreme Court's decision shows its argument was more persuasive. The ruling is the latest twist in a ferocious legal battle between the world's top smartphone manufacturers that has been raging since 2011. Lee Ju-young, Business Daily.
More Korean exporters are on the receiving end of trade sanctions, with countries like the United States and China continuing to step up protection of their markets. Anti-dumping sanctions were the most common restrictions, with 132 cases as of the end of November, up 25% compared to the figure tallied last year. Korea International Trade Association says the number of safeguard measures, or the act of placing tariffs on imports that could hurt the domestic market, fell to 43 compared to over 60 cases seen last year. The metal industries were the most common target, taking up nearly half of the cases, followed by chemical companies. Japanese telecommunications giant Softbank has pledged to invest $50 billion in the United States and create 50,000 new jobs in the process. U.S. President-elect Donald Trump announced the deal after meeting with the group's CEO Masayoshi Son at Trump Tower. The details were not shared, but Son suggested the investment would target the technology sector. He told the Wall Street Journal that the fund would be part of a previously announced $100 billion international investment fund that he began setting up with Saudi Arabia earlier this year. Softbank Group operates in broadband, e-commerce, and other businesses, and it was listed as one of the 10 largest Japanese companies by Forbes magazine last year. And that does it for today, but we'll be back tomorrow with more at the same time, same place for your Business Daily. So don't forget to tune in then. Thanks for watching and see you soon.